So, yo, what is up for y'all, the YouTube replay? I hope you're having a great day. Let me start this off with a quick portfolio update. The market is surprisingly green today. Knock on wood. Hope I didn't jinx nothing, but check this out. Here's our portfolio. We're up 0.5% on the day, and year to date, we are up 13% if you look in the top. This is our dividend only portfolio, so we only own dividend stocks in here, and these are the dividend growth stocks that I've chose to buy. And here's my total percent change on every stock. I believe we might, yeah. So we're actually down on CSL all time in here. But that's okay. Actually, if you include all the dividends I've received from them, I'm probably net green on Carlisle because we've received a lot of dividends from that company here. If actually anyone wants to see that. Yeah, check that out. $14, $13, $12 dividend. They have been raising their dividends for over 49 years, which is pretty cool. So yeah, that's our main portfolio. We also have a Roth IRA. We're up 0.69% on the day, which is pretty cool. And every stock in here is green on the day, except for DCTH. But yeah, this is our, I'm trying to grow this one as much as I can. We started it exactly a year ago, pretty much. We're up 12%. We put in 2K this year. But yeah, those are all the stocks we own in here. And finally, we have our Moomoo portfolio. This is our buy and never sell account. So once I buy a stock in here, I try to never sell it ever. So actually every stock in here is green on the day. So that's great news. Comfort Systems is having a great day. Powell Industries as well. So the market's pretty happy today. So let's go. Happy Friday. Hope everyone's having a great Friday. Would you short Nike? I don't know if I would short Nike. But if I'm just looking for a stock to buy and hold for the long run, I would just be careful with this one because I've been there. Look, I used to buy Nike. I used to own a bunch of shares, but I actually sold out of all my Nike at $78 a share. And here's the thing, the financials explains this. If you're ever wondering, like, why is a stock doing so bad? And it's kind of the whole industry. You look at Under Armour, Lululemon, Louis Vuitton, Gucci stock, they're all public and they're all not doing great. And it's just from their financials, like, look at the revenue, the sales, the lifeblood of the company. The revenue is down 12% on Nike. So revenue's down 12 and the net income is, yo, what up? Yeah, we'll look at Dr. Pepper and what up, Looney? But check out the net income. This is the bad news. The net income fell 85%. They only made $200 million in net income. The net margins literally collapsed. Only 1.9% net margin. And yeah, they still made $200 million of positive net income. But here's the tough thing. Nike also pays a dividend, and the dividend cost $590 million of net income a quarter. So they couldn't afford the dividend this quarter, which is a bit, you just got to watch that. So yeah, I do like their brand though. Let's look at Dr. Pepper though. So investors are a little disappointed in Dr. Pepper after they're spinning off Keurig. So if you look at the name, it's called Keurig Dr. Pepper because they own Keurig. They're like the coffee machines. They get a lot of recurring revenue from the K-Cups and stuff. But yeah, this one has just not been doing too well this past week. They're spinning off the companies again. So I think this one is worth looking into because I don't know how that's going to work. If the two companies are going to split up, I don't know how that would lose value separately. I don't know. But check this out. You get a nice yield of 3.6% dividend. I just wonder how it's going to work. Will Keurig be its own stock and will Dr. Pepper be its own stock? I just don't know what's going to happen. Will the ticker symbol change? So it's just it's a huge change for the company that wasn't expected. I do like Dr. Pepper, though. I think Dr. Pepper has surpassed Coca-Cola cans in sales in the U.S. All right. What up, Looney? The myth, the legend. Good to see you, man. How's it going today, John? Yeah, dude, John, great. Today is really green in this portfolio. We're up 1.9% in that portfolio. If you look, that one's up 0.7, 0.6. And this one, we're actually down on the day in this account. Let's see. Let's go find out what happened there. Okay, so yeah, look at this. P6, AMD, Futu, Sprouts Farmers Market again, continuing those declines. Great. So hey, what up, Rye? He said Innodata. Yo, this has been one of my better performers in my Roth IRA. And they're a data labeling company. 5 of the Magnificent 7 are their top customers, and I do own them in my Roth IRA. I might be biased. And as much as I love this company, I wouldn't make it as a big size position, and I certainly wouldn't touch it at this price. I'm up 108% on them. Literally, in most of these gains are, look at them in just 1 month. They're up 80% in a month. So this is literally just come in 1 month. So Innodata, this one is really good fundamentally. And the revenue is expected to continue to hit a record. But check this out. Their digital data solutions revenue is expanding like crazy. It's up 99% after growing 92% to a new record. And the revenue was at a record this quarter, and it's expected to hit 71 million in 2 quarters. And they usually beat on expectations. They're net income positive every quarter. That's another cool thing. They're net income positive every quarter. Check that out. Net income positive and free cash flow positive every quarter, deleveraging their balance sheet. And they have a pretty nice balance sheet or market cap. If we look at the market cap, it's 2.2 billion like that. It's easy for them to double that compared to like an Nvidia for them to double a 4 trillion market cap. Hey guys, hold on. Watch out for that person in chat. Hey, that's a watch out for him. Yeah, by the way, never DM or I'll never follow you, DM you. Watch out for people impersonating me. I just banned that person. Okay. How can you invest in your Roth IRA? You just got to get a brokerage, and then you can start a Roth IRA, which is pretty cool. So yeah. If your brokerage might or might not allow it a Roth IRA, but if you want a brokerage that does allow a Roth IRA, mine's with Robinhood. If you want to get Robinhood, I do have it in the link tree in my bio. It's like the third link there. It's Robinhood. It's an affiliate link. So actually, if you sign up, we'll both get $5 of like a fractional share if you sign up with my affiliate link. Okay. Anyway, Joel said, "Hey man, I'm having a bad day. My motorbike was stolen, dude. That's so sad, man. Like, that sucks." Hey, what up, Kudo? He said PLTS stock. Let's do it. And what up, Tommy? How's it going, man? Tommy 1. So what is PLTO? Wait, PLTS, I mean. Man, I feel for you. That sucks. The bike stolen. So anyway, this company just went public. Like, there's only 5 days of candles here. So unfortunately, we're probably not going to get too much data. Like, I wish I could really give you more thoughts on this company, but they just IPO'd. We don't get much data. Like 100,000 of revenue in the most recent quarter isn't great, to be honest with you. Like 100K of revenue, a balance sheet of $1 million of assets and $1 million of liabilities. What is this? It's a Chinese Singapore company with a $200 million market cap. I'd be so careful with that. I just wouldn't even touch it. Here's another stock I wouldn't really touch. I feel bad if you own them. This is Krispy Kreme. You've probably heard of them before. It's like a donut shop, but this is sad because they're kind of going bankrupt right now. If you look in the top right, this is how much Krispy Kreme is worth. $580 million. Like, that's so tiny. And here's why. They're just not growing. If we look at the revenue, the sales are down 14%. That's tough. Revenue's down 14, but look at this net income loss. And this was related to the McDonald's thing loss, but McDonald's partnership where they took a bunch of Krispy Kremes out, but $440 million net income loss. I mean, that really impacted their balance sheet. And, that's like basically what their market cap is. Even if we exclude that one quarter, like it's just such a choppy business. The only reason they made net income that one quarter is they sold some assets, as we can see from the cash from investing activities. They sold off $100 billion of assets, another $56 million this quarter. I'd be so careful with Krispy Kreme. I would not buy them at all-time lows. Another, it's kind of the whole industry too. I feel bad. Like, look at Wendy's too. Like a basic stock like Wendy's, I'd probably rather buy Wendy's. I would rather buy Wendy's than Krispy Kreme, but I'd rather buy McDonald's or something. But yeah, Wendy's is the same price that it was back in 2007. It was my dream pike too. Dang. I'm going all right. Friday. Yeah, great Friday, man. Hope everyone's having a great Friday. What's going on with Starbucks? Yeah, that's another one in that same industry we were talking about. I feel bad for Starbucks. The reason their stock is declining so much is because, first off, the coffee bean prices have really impacted their input costs. And what does that mean? It means their margins go down. And if we look at Starbucks, they're the same prices they were back in 2019. So Starbucks has literally been flat for 6 years. Why? It's because of their increased competition in China and declining margins. Like it speaks for itself. I mean, look at this. In 2023, they were making easily $1 billion in net income a quarter. But look at it now. Look at these year-over-year declines. Negative 47% year-over-year, negative 50%. And here's the tough part. They made $558 million in net income this quarter. Like, they were still net income positive. They still made $558 million in net income, but the dividend cost $700 million. It cost $693 million a quarter. So they didn't retain any of this net income. Over 100% of it got paid out to dividends. So they've basically been technically they've been net income negative the past 2 quarters. And their dividend honestly needs a healthy cut unless they really can recover quick. And our analysts expecting that? Yikes, look at that. These huge misses on net income per share. I'd be careful with Starbucks. if you just want to I'd rather buy McDonald's or maybe even a Luckin Coffee. Luckin Coffee is like a huge competitor. Favorite consumer staple stock? I really like Procter and Gamble, PG. Um, Dunkin' Donuts, hey, what up? Rich Tech Robotics, yeah, hey, we're not that one's not great as a robotics company. I mean, like they've been momentuming on some like revenueless, like Nvidia robotics deal, but this is just not a robotics play. This is a momentum play. You swing trade, in my opinion. And I'll just show you what I mean here. Again, it's a super small company. They're worth $760 million. So the whole company's worth 760 million. This is what you're buying. Like the business, like the revenue's down 20% year over year, and the revenue was 1 million this quarter. It's like it's hard to trust these kind of companies, in my opinion, with like real meaningful money to just buy and hold for the long run. Like I just like to show you the numbers for yourself. You can always draw your own conclusion. But yeah, revenueless company. Um, yeah, but they are issuing shares to raise cash. What app are you using? Yeah, hey, by the way, I'm on a brokerage where you buy stocks on. If you want to get this app I'm on, it's my favorite brokerage. It's in the link tree in my bio, the very first link there. So hey, what up, Gabriel? What up, dude? Um, what are your thoughts on Rocket Lab? Hey, yeah, Rocket Lab. This is a really cool space company. I've looked at a lot of space stocks, and none of them have impressed me like I have seen with Rocket Lab. This is the one I would choose. Oh, no way. They're acquiring another company. This is what I've been talking about. They just finished their Geost acquisition. Now they're acquiring, even though it's only 150 million, that's great news. That's great news. So the one thing I love about Rocket Lab is that they're growthy, and I don't care that the growth comes from them acquiring businesses. I just love growthy companies. Like if you look at their main business, their space systems business, this is up 27% after growing 94. Like the revenue's at a record sales there. And if we go to the launch services business, this one's also at a record, up 58% year over year to 46 million. It's never even been like close to that. And look, they're beating on expectations. The orange line's what the analysts expect. They're beating on revenue. I would still be careful with watch the net income numbers. They are still losing a bunch of net income, but they're able to, as long as they continue the sales growth, it's okay. Also, they're growing their balance sheet with the acquisitions. They just finished Geost, Minera, whatever that was called, they just acquired. So pretty cool. I like them. I don't know. I don't know. Not right now's valuation though. I'd be careful with them, but high growth companies deserve high PEs, like a SoFi or Robinhood. Um, on Robinhood, where can I see how much they pay out in dividends? You can't on Robinhood, and I am not on Robinhood right now. But yeah. Okay, let's see here. The CFO just sold 42 million of Rocket Lab stock. Well, he earned it. I always try to ignore when Jeff Bezos sells 10 billion of Amazon stock. Like it doesn't ruin my thesis. Like my thesis for the company is I'm buying them for the good financials. I don't care that the insider who's trying to retire has been working there for a million years. It's not a bad sign. Oh, hey, what up? Let's keep going here. What up, Jace? Good to see you. Let's look at Costco. So they just reported earnings. What app is this? Hey, Gabe, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. It's a brokerage. It's where you buy stocks on. A lot of people just like to keep their idle cash in here like me. I earns you daily interest. So anyway, let's look at Costco. They reported earnings yesterday. And let's go see what they were because I haven't looked at them yet. Looks like they're down on the day. I know this one just has an expensive multiple, but I love their actual business model. And I would love to own Costco, but it'd need a pretty another 10% drop for me to really consider it with a lot of money for a good risk reward. But this company trades at 50 times net income. The thing is, like Costco can't really double their net income. But they grow it very steadily. But check this out right here. It's the best business model. You have to pay a subscription to get into the store. And whether you go to the store or not, they still collect that high margin subscription fee every month. And when you go there as a consumer, you're getting a good deal because you're buying stuff in bulk. So consumers are happy. So yeah, they make 1 to 2 billion in net income a quarter, 3% margin. So yeah, low margin industry. Kroger has a 2%. So I actually, if you like Costco, I will recommend, of course, I don't recommend anything, not financial advice. I'm not an expert or anything. I'm just a college student, and I sell nothing, of course. I have no course book, nothing like that. But I actually recommend Sprouts Farmers Market. They're another grocery store. Look at that monster fall. Some people like to buy stocks that look oversold. This could potentially be one. I like them because they are a high margin. They're a healthy grocery store. If you've heard of Sprouts Farmers Market before, high margin grocery store. Look at that 6% margin, 8% margin because they sell more healthy stuff. They have more pricing power than like a Costco anyway. There's pretty cool. What is FOFO? Is that a Chinese company? Hopefully not. What should I buy as a first stock? Well, I would buy VOO, the S&P 500. And then, yeah, look at that. They just IPO'd. They IPO'd at $10 and now they're 46. So yeah, what we're seeing a lot recently is whenever a company just IPOs, they rally up instantly and then kind of slowly get back to reality. You saw it like CoreWeave, Webull, a lot of these. So I'm investing a lot on BBWI short term. So Bath and Body Works. Okay, so this is kind of like a mall company, and these are just not, in my opinion, these are just not the kind of stocks that outperform in the long run. Like you look at Kohl's, you look at Macy's stock, they just don't do good. Like this stock is literally the same price that it was in 2006. This just isn't a good looking chart, and it's just because their business model. Let's see what the revenue is. So the revenue is up 1.5. You know, there's not a growthy company. The revenue's up 1.5. That doesn't beat inflation. So, and the net income fell by 50. Was that real? Well, it fell by 15. So they're losing their margins as well. At least nothing here is really impressing me. Like nothing's really making me want to buy BBWI stock. You get a 3% yield. Looks like a safe 22% payout ratio. But again, just like high debt load. Wow, actually, let me look at their long-term debt real quick. That's the nasty stuff, what you don't want. So they have at least their 3.9 billion of debt. I mean, that's it's not that I just wouldn't buy them. Rather buy a McDonald's or something. So hey, what up, Clem? He said Oklo. This is huge momentum. Like there's nothing financials to look at here because that's a startup right here. So this is a startup company. And right now, especially with the market at all-time highs, you know, that's where a lot of momentum, that's the time to be in momentum stocks. And this one is, I think, worth not looking into. If you want exposure to real nuclear assets and nuclear energy, I've looked at all of them. I've looked at Vistra, GEV, Oklo, SMR, all of them. And the only one I would buy is maybe Vistra Energy. They're a far second place, but the best one by far is CEG, Constellation Energy, largest purest nuclear reactor play. They literally own 50% of all the U.S. nuclear reactor fleet. There's no close second place. Like Vistra Energy has like a tenth of the reactors. But anyway, let's keep going here. So hopefully that. Oh wait, I forgot to show you Oklo though. Okay, yeah. Here's why I'd stay away from Oklo. Like again, startup. If we go to the revenue, it says no data because they've never sold anything. They've never sold a product or a service, and I don't think there's any clear path for any revenue anytime soon for at least another 2 years. But a lot of future hopium you're paying, and they have like a $15 billion market cap with no sales. It's tough to pay. It's tough. Is Fidelity good? I've never used that. What up, Brian? Should be good though. I use this brokerage right here. It's only, in my opinion, it's the best one. You know, I know Fidelity wouldn't be as useful as this one. Like there's so many cool things on here. Oh yeah, there's this feature. Yeah, check this out right here. There's a 87% chance of a 25 basis point cut on October 29th. So yeah, we can see like the Fed dot plot and stuff. Let's see. Yeah, we can kind of see the interest rate cut, FOMC target, the dot plot, all that, the Buffett indicator. You get that's that stuff. But I was wanting to show you the other feature right here. Yeah, the portfolio tracker right here. You can track like Nancy Pelosi's portfolio and stuff, which is kind of cool. But anyway, let's keep looking at stocks here. Yeah, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's my favorite brokerage. Yeah, link tree in bio, first link there. So what up, Burner? Dude, no way. Thanks for those roses there. Heck yeah, let's do it. ASX stock. Thanks so much, dude. Let's do it. So this stock it looks like it's at all-time highs right now. It's a bit cyclical, like goes up and down and up, down, but overall the trend is up to the right. So they have been flat for a while. Like they're the same price as they were like over a year ago. Let's see. Oh, so we're actually going to convert their currency. What is that? TWD. I should know what currency that is, but Taiwan. Okay. So Taiwan is 15% of the revenue, but the US is 60% of the revenue. So I do like that. Well, let's see what they do. Businesses, they do packaging, electronic manufacturing, and testing. How's that business doing? That business is up 46% year over year. Hey, hidden gem growth business there, maybe. Let's check out the sales. So the sales are up 19, and the net income, that's very consistent. They're making 200 to 300 million in net income a quarter. And this is in USD. This is converted. So this is good. Yeah, I'd be careful. They might be an ADR. You get a 3.2% dividend yield. Pretty cool. Is this Robinhood? No, this is not Robinhood. I do have Robinhood though. I do like Robinhood, but they're just not as useful as this brokerage right here. Yeah, like on Robinhood, like let's say you have idle cash, you have to pay $5 a month to get a 3.75% APY on your cash. That's why I keep all my cash in here, because it doesn't cost anything. It's free. Your idle cash earns you daily interest at 3.85%. So that's why I like this one. Again, if you want to get this brokerage I'm on, it's in the link tree in my bio. First link there. Affiliate link, full disclosure. But let's keep going. MU post earnings. Dude, this stock had incredible earnings. Like the multiple is so cheap on this stock. I love them. Let's do it. So I'm actually shocked they're not up more. They deserve to be at all-time highs right now, because look at this multiple. They're trading at 20 times net income. For the industry average, the industry average is 47. They're trading at a very low PE, but are just as growthy. Check this out right here. If we go to the revenue is up 46% year over year after growing 93. That is insane growth. And check this out. Out of this 11.3 billion of revenue, legit 3.2 billion, that was net income. The net income is up over 3x year over year. So they honestly, and that's not like some propped up adjusted number, like that's their real net income. That's insane. So they're just super growthy. I like Micron, low PE, seems like a value chip play that's still growthy. I actually like them. I do. So I might buy Rocket Lab, RSI. Yeah, I wouldn't do it. What is this one? Oh yeah, so I'll be quick. The government took a stake into this stock right here. So if you're wondering, hey, why did this stock rally up on that huge day? Well, if we scroll down here to the news, the AI news, U.S. government negotiates a 10% stake in Lithium America. So pretty cool. We've seen recently the government take a lot of stakes into like Intel, into MP materials. So I think the government wants to be more like independent, especially since we're like manufacturing independent, especially because we're poking everyone on a stick with tariffs. So how much cash does SFM have and doesn't have a dividend? How much cash does SFM have? They have like 250 million of cash. Oh, we're already on here. Okay, well, let's check it out right here. If we go to their cash right here, they have $260 million of cash total. And sometimes I like to add the total inventory to the cash too. But yeah, if we go to their total long-term debt, it's zero. So they have no debt on the books, no long-term debt to pay, which is pretty cool. And then they just deployed on share buybacks. Actually, the number one thing I like about Sprouts Farmers Market, you ready for this? They've bought back 25% of all the shares since 2019. Check this out. I'll just show you for yourself. If we go to 2019, the total number of shares, look at this. Or we'll start it was 127 or 118. So in 2019, there was 118 million shares that exist. Now, in the most recent quarter, there's only 98 million. That's insane. So yeah. What's the difference between a margin account and cash account? Yeah, hey, margin account is what I have. Just you just never use margin. It lets you get the instant deposit. So instant deposit whenever you deposit cash, or you just have to wait for the cash to transfer 2 days to spend the money. That's what a cash account is. Or you can just look it up. But I just have a margin account, but never ever take out margin in my opinion. Why take out debt to buy stocks? Don't do that. Hey, the Reyes, dude, no way. Thanks so much for the roses there, the 6 roses. Yeah, he said Amazon, let's do it. They're in this portfolio. This account, if you look in the top, it's called my buy and never sell portfolio. And one of the stocks I own in here is Amazon. I think they're a good buy right now. Like if you have the intention like me to just buy and never sell Amazon, it's a good buy right now. And they have so many businesses in one. They're like an ETF. They're an e-commerce play, book play, subscription play, advertising play, grocery store play. It's a UPS, Instacart, Walmart, all in one. I could go all day about Amazon. And a cloud play. They're the number one cloud service provider. Did you know the most valuable part of Amazon is their AWS business? This is literally their highest margin segment. They're not making too much net margins shipping you one day overnight deliveries, but the high margin business is their AWS cloud service provider. It's over 100 billion of annual revenue for them, and it just hits a new record every year, every quarter. So one thing I love about Amazon right now is their margin expansion. If you look at the revenue's up 13%. So revenue's up 13, but the net income is up by 35. So expanding margins, I love it. It used to be a tough buy. Amazon had negative margins, single digit margins. Now it's double digit and growing. So I love Amazon deleveraging the balance sheet. I love they're so innovative. When we go to the cash from investing activities, they're deploying crazy money into new investments. You never want to see this be positive. If this number was positive, that means they're selling their assets. You want to know how Jeff Bezos is so rich? Look at this. He owns 8.28% of a $2.3 trillion company. Ain't that insane? Congrats to him for not selling this. Okay, what type of stock gives you a K1 tax form? So the kind of stocks that give you a K1 tax form are ones that aren't stocks. They're actually MLPs. You buy units of them. If we, like an example of that, if we go to AMLP, here are all the most popular MLPs. You know, ET, EPD, WES. If it has midstream, pipeline, LP in the name, that's most likely an MLP, and they'll send you a K1 tax form. You don't want those. They're notoriously hard to fill out. I accidentally bought, 2 of them my first year investing in me. So besides, you just don't want to buy those. All right. So unless you're okay with that K1 tax form, which a lot of people are, especially for the income. So thoughts on what up, Gent? He said FEIM. What's this one? I don't know if I've heard of them. Frequency Electronics. Well, check that out. They're at an all-time high, it looks like. Wow. Since the year 2000, the dot-com bubble. But they've done insanely well these past couple years. Let's go check out their financials. I'm actually really curious. Oh, and the market closes in 1 minute. So they sell FEINY. Looks like that one, if we go to the annual trend here, it's a bit cyclical, it looks like. Let me just go to the expectations here. Well, there is no expectations, really. So the revenue is $13 million, and the revenue is down 8% year over year. They are net income positive every quarter, which is good, but the profits just fell. There's a lot I don't know about this stock. I wish I could tell you more. Like there's something I don't know here. Like there's some sort of good news probably propping up this stock. So I would just be careful with that one, given their like declining sales. I like that in declining operating profit. What's a good low cost tech stock? That's a good question. I don't know right now. I mean, low cost, like low valuation. I mean, Google and Meta have some pretty fair valuations. Those are 2 I own. Again, none of this is financial advice. This is my dividend-only portfolio. I do own some tech stocks in here. Yeah, this is everyone's favorite, my risk-on portfolio. If you look in the top left, we're only up 13% all time in here. But yeah, we got a lot of popular names like Reddit, Robinhood, SoFi, AMD, Supermicro. And to be honest with you, there's not many great deals out there. Like I would not really touch a lot of these stocks at their current prices. Like I just wouldn't buy them at their current valuations. But I am down on a lot of stocks like SFM. I think that one's actually a pretty good one. Not obviously a tech stock, but pretty cool. All right. So, ASX is a low cost tech stock. Oh yeah. They had like a 3% yield. I forgot, was their growth good? Okay, can we see, what is this one? Can you check out GE? Yo, that's GE Aerospace. Yo, ever since the spinoff from like all the different the GE Healthcare spinoff from the Aerospace and the GE Vernova, the management has really been able to narrow in and focus on margins, and they're beating all expectations by crazy. Like the orange lines, what the analysts expect. Oh yeah, by the way, Jackson, if you want to get this Applemon, it's actually a brokerage. It's where you buy stocks on. It's in the link tree in my bio, the very first link there. But check out the orange line. That's what the analysts expect, and they just beat on revenue like crazy, and they beat on net income like crazy. And check this out. Like this is honestly the best part. The revenue's up 21, but the net income is up by 59. That is insane. That means they're expanding margins. Margins went from 13 to 18. That's so significant when you're doing 11 billion of revenue. Yo, Danny Sog, what up, my friend? Hope you're having a great Friday. Yo, hope everyone's having a great Friday. Someone said ASTS. Yo, that's actually another space stock. I think I like Rocky Lab, but you're really watching, I believe. Yeah, so this was it. You're really watching the next 2 quarters for this company. So it's a huge momentum stock right now with no real financials. Like if you look at the right now numbers, they're not like it's not good. It was $1 million of revenue, losing a couple $100 million a year. Like financials aren't good, but here's the turning point. The next 2 quarters are extremely crucial as they changed from a revenue-less company, basically doing $1 million. They're expected $25 million next quarter, and then $33 million. So really watch out these next 2 quarters. Let's hope they beat on expectations. So this is really a pivotal point of time for them. Hopefully that was helpful. I don't know, but that I like Rocky Lab too. I'd be careful with that one. It's really a betting on earnings. That's really what it is. You're really betting on earnings in the next 2 quarters. So I'd be careful. But that's really what's gonna. Let's see, the SOXX ETF. Yo, that's actually a semiconductor ETF. If you're like, hey, I don't know if I should buy NVIDIA, AMD, or Taiwan Semi, like which one do I buy individually? Well, this ETF right here just answers that for you. It just diversifies you in this ETF through all these stocks right here, all in the semiconductor industry. Its largest holding is now Broadcom, which I find interesting. I think it used to be NVIDIA, but then NVIDIA, AMD, Qualcomm, Micron. Pretty interesting. Okay, Alex said, I want to jump on APLT. What is APLT? This is not Applied Digital, but this is Applied Therapeutics. We all know APLD. Don't know whether to buy more of Amazon or wait further. Hey, yeah, that's what I feel. So this company is up 121% today. So when we look at the market cap, it's 178 million. Before today, it was 50 million. So the stock just gained up, well, whoa. So this thing was at an all-time low. So maybe, was there any news or is it just momentum? Posted confirmation study. So it looks like there's some sort of revenue-less company. So if we go to the revenue right now, it's zero because they don't sell anything, but maybe one of their products just had successful results. So there's good news. That one's so risky. Like it could be like a year for them to actually sell something. I haven't even done no research on them. So I do have some stocks like that, though. I think a better version of that stock would maybe be a DCTH. I might talk about this stock, actually, if anyone who wants to hear my pitch on like, Nathan, why would you ever talk about a stock that looks like this? And I can't stress, if you find value in this stock, you cannot, I don't care who you are, you can't put over $100 of this because it's extremely risky. But I really, let me cover it real quick. I'll show you why DCTH, I put it $200 or $150 in them. Again, if you like this one, don't put any more than that. So I'll just show you from a financial point of view. It's an extremely risky healthcare company, but here's why. There's a $375 million company. So if you look in the top right, the whole company's worth $375 million. Here's the cool part. They literally have no debt at all and $81 million of cash. No, wait. Cash? Why did I say 81 million? Maybe they have 80 million of cash. Huh. Wait, it's just not loading on the balance sheet for some reason. Well, anyway, oh, I scrolled over. I'm slow. Okay. It's right there. Yeah. So they have $81 million of cash on hand and no debt. So that's huge. That literally like 25% of the entire market cap, 25% of what you're paying is just cash on hand. And they finally have sales. They just got FDA approved. They have 24 million of sales. And on that, they're making net income. That's the crazy part. So it's a 350, what was the exact number? It's a $375 million company with no debt, 81 million of cash, growing sales tremendously, and net income positive every quarter. And analysts are expecting them to continue to be net income positive. So from a financial view, that's why I like this one. It is a bit risky though. They sell this Haptazo kit. It's a liver therapy. It's a super complicated thing to do, but basically a liver therapy thing. All right. Let's see. Nebius, why is APP? Let's look at APP. So that's actually AppLovin. This stock just joined the S&P 500. And to be honest with you, this stock deserves to be at all-time highs because this one has great fundamentals, like great financials. Check this out. If we go to their revenue right here, by the way, this is an advertising stock. And if we look at the revenue, it's up 77% year over year. So the revenue is up 77, but the net income is up by 164. So that means they're expanding margins. Like you won't believe this net margin. It's 65%. That's better than NVIDIA margins. This isn't like propped up either. Like this is real net margin. It is like the business runs itself. Like it's insane. They're an advertising company. So I can totally see why they're in the S&P 500 now. They're printing money at this growth rate. Like, what's the net income going to be at this same time next year? So I don't know if I'd buy them right now. They look really expensive. They're like a Palantir, insanely good fundamentals, but too high of a price for me to pay. So let's look at Nebius right here. What up, Danny? So yeah, that's actually in the NVIDIA portfolio. So if we go to NVIDIA's holdings right here, again, just because NVIDIA owns a company doesn't mean you should. You should always go do your own research on a stock. And when we go do our own research on Nebius, I see good things here. One also thing that's a huge mover for Nebius stock lately has been their huge deal with Microsoft. If we scroll down to the news right here, it should show us. Sorry, my Wi-Fi is really slow right now. I guess it always is. So, yeah, Microsoft signed a $17.4 billion AI data center deal with Nebius. So, yeah, basically having the second largest company in the world as a partner is huge. And this is the best part, though. If we go look at, I might have to restart this app. But look at this. The revenue is growing insanely fast. Revenue went from 14 mil to 100 million. That's insane. 100 million this quarter, and look at what the analysts are expecting. 265 million in 2 quarters. So that is nuts. All right, let me reset this. What app? Yeah, hey Josh, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's actually a brokerage. It's where you buy stocks on. It's my favorite one. Most useful tools and stuff. Let's see here. UNH. You know who also just bought UNH? Was the main man, Warren Buffett. So, he's a super investor like Nancy Pelosi. He has to make all his trades public by SEC law, and we can see his newest positions. And he just bought, as a new position, first time ever this quarter, some UNH shares. This is United Healthcare, and that was great news. If Warren Buffett's buying a company, it seems like he really does his due diligence, and it's not some Joe Schmo stock. So it was really good sentiment. So the stock rallied up legit like 10% on the day Buffett bought some shares, and it's kind of been up ever since. I would still be careful. There are some headwinds, of course, government overcharging the government, and if we go to their net income right here, the net income is expected to fall like 50%. Yeah, hey, Just, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's a brokerage where you buy stocks on. It's an affiliate link, full disclosure too. But check this out. The net income in 2 quarters is expected to only be $1.70. Like same time last year was $5.90. It's going to go to $1.70. So really still watch these next couple quarters and watch the margin. But, we're a customer then. We use their OptumRx. Let's see how that's doing actually. OptumRx is 34% of the revenue. It's up 19% after going 13, after going 15. And this might be why the government's not too happy. I mean, it's now $133 billion of annual revenue for them. In 2020, it was 35. And that's just one business. If we look at their main UNH business, this is over 300 billion of annual revenue. It's crazy. They're a massive company, and they're the biggest one, so maybe safest. But also, here's one thing about UNH. If they get accused of fraud, which honestly I don't think they will, but one risk that was being priced in is they will literally get kicked out of Medicare and Medicaid for 5 years if they get accused of fraud. And maybe it's slowly, that chance of it happening is slowly being priced out of the company right now. The sentiment's good with Buffett buying and all that. So I'd be careful with that one. I wouldn't have it as a huge position. I wouldn't buy it at this price. 310 is maybe better, but hopefully that was helpful. What company was looking at with no debt and 51 million in cash? Yeah, or 81 million in cash. Yeah, that was the super risky company that, again, if you like this stock, don't put more than $100 in it. Like it's DCTH, the company that's down 100% all time, that has no debt, $81 million of cash, net income positive every quarter, earning interest on their cash as well. Yeah, and as much as I like them, like the industry is so risky. Like they dilute you. Like just careful on that one. Here's my Roth IRA. We're up. The market's closed. Wait, we forgot to look. It closed 10 minutes ago. So here's how we did, super quick, and then we'll go back to the stock. We're up 0.69% today. Looks like these were our winners, and Meta was slightly down on the day. How was the S&P? So the S&P was up 0.6%. That was a great day for the S&P 500. It's like Apple was down a little, Palantir. So there was that portfolio. Then, of course, we have everyone's favorite, my risky portfolio. We're down 0.4% on the day. I think that was from like Futu and stuff. Yeah, Futu, Power Solutions, AMD was down. And then, of course, our buy and never sell portfolio. We're up good at 1.8% in this account on the day. FIX was had a great day today, up 3%. They're near an all-time high. This is my best performing stock ever, or my largest holding. Hey, what up, Michael? And what up, Martin? Good to see you guys. Yeah, if you got a stock you want me to look at, let me know what the ticker symbol. So let's see. How does Hood still have room to grow? I think it does, but the risk to reward on buying it here is not good. Like I really do think Robinhood's just going to continue to win in the long run, but yeah, it is really expensive right here. I think they trade at like 60 times forward net income. Dude, please Wi-Fi, I'm gonna need you to work, please. Okay, there we go. So yeah, this one is at all-time highs. They're trading at like 60 times net income, but they're so innovative and so growthy. We can see the net cumulative funded accounts. It's 26.5 million. When the same time last year it was 24 million. So a nice little 2 million plus increase in paid users. But look at how growthy they are. The revenue is up 45 after going 40, after going 52, and look at the revenue. They did 989 million this quarter in revenue. Added as 989 million revenue, legit 390 million of it was net income. They're making a couple hundred million in net income every quarter. They've seen successful results with the Robinhood Gold subscription. They legit at a 40% net margin. These brokerages have insane margins. You look at Futu, you look at Interactive Brokers, they all have insane margins, and Robinhood is capturing that market. So innovative. I love them. And I do own them. I might be biased. What was your largest holding? Yo, George, good to see you again, dude. Yeah, it's actually right here. FIX Comfort Systems at the top there. Yeah. And I haven't sold a single share ever of them. I bought there's all the buy orders, and then I haven't sold any since. Just keep collecting dividends from them. They've risen their dividend for like the past 4 quarters in a row. Hood might run to 200. I'd love to see that. Do you own any Verizon? I do not, because I don't think young investors should be in this sort of asset. This is a higher yielding play. And here's what I mean. If we look at Verizon on the stock, like Verizon is literally the same price that it was back in 1997. Yeah, hey, by the way, big brother, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's a brokerage. It's where you buy stocks on. But yeah, the Verizon is literally the same price that it was back in 1998. That's insane. Like, you made no money for all that time, but the one reason people love them is because of the dividend, and it is sustainable. The dividend is safe, but this isn't the kind of stock that'll outperform the market in the long run. You get a 6% dividend yield. They have a lot of debt. What is the debt? The debt doesn't matter. If we go into inflation, that'll help. But yeah, 270. But their revenue is so predictable that they're able to get debt at low rates. But yeah, their current debt is 22 billion. No, actually, there's more than okay. Anyway, let's see. That was I need to look at the long term. Kroger versus Ahold. What is Ahold, Michael? Give me the ticker symbol. And yeah, it's been a while, man. Good to see you. I do know Kroger is just like a boring grocery store, but they do insane buybacks. Like, you guys want to see something crazy about Kroger? If you look at their net income, the net income is up by 31. So the net income's up by 31, but the net income per share is up by 42. They literally bought back they bought back 10% of all the shares just in 1 year. Yo, what the heck, Stinky? Hey, try not to spam, or I don't know what that was in the chat, but hey, what's up, dude? Look what happened. Okay. But yeah, Kroger, it's just a low margin industry. If we look at the low margin industry, they're doing legit 1 to 2%, like under 2% net margin. So like if we go to the sales, 33 billion of sales, out of that 600 million of it was net income. So very low margin business, but hopefully they can expand their margins over time. But they're a buyback dividend play. They have a nice dividend. Man, I wish I bought FIX. I think it was like 500 when you first showed me it. Yeah. Well, I don't even know if I didn't talk about it much. I wish I talked about it more. So what up? Atai said TE stock. Is this T1 Energy? Well, the stock is at an not all-time low, but I'd be careful with this one. If you look in the top right, they're only worth 370 million. So that's an extremely small number. Oh, are they revenue-less? Oh, they do have revenue. And wow, the expectations are very good. Whoa. So they did 132 mil of revenue this quarter, and it's expected to be 400 million in 2 quarters. They're still expected to lose net income. But that's insane growth. So really watch out these next couple quarters to see what happens. I don't know what just happened. Did they buy a company? I don't know. So watch out the next 2 quarters, I guess. Hopefully that was helpful. I don't know. So I have 1,000. Where would you split? Yo, and not financial advice. I would just put it in first off the S&P 500. I keep that as like the backbone, but then play around with some of your favorite individual stocks. Like a company I'm really highly considering buying more of is Amazon right now. You know, they're like they're a subscription play, e-commerce play, cloud play, book play, robotics play, uh, autonomous driving play, UPS, Instacart, Walmart, all in one. Like Amazon's a beast. Or just invest with like Google, maybe, like a Meta. Oh, hey, give me the ticker symbol for that one, Michael. He says Ahold Delhaize worldwide chain. I think I've heard of them before, but I forget their ticker symbol. All right. Let's see. VKTX. This is another one that I think just got like FDA approval. I beat or maybe not. Or no, here's what happened. Right here was the day they got FDA approved. So the stock rallied up, but then literally it's been 2.5 years and they still haven't sold a single thing. Like they're so late. Like investors aren't happy. If we go to the revenue, it says no data because still they've never sold anything. They've never sold a product or a service. And if we go to the net income, they're starting to burn more and more net income. It's starting to make investors not too happy. So we really want to see them finally start to actually sell something because it's making investors panic. Quantum got exposed this week. We'll talk about that. Oh, Quantum. Hey, yeah, Quantum has been on some crazy momentum. TTWO, Marvel. Hey, yeah, well, look at Marvel. You're really waiting for next quarter on Marvel. So, oh, and Costco. What application is this? Yeah, hey, it's in the link tree in my bio, the very first link there. Again, I'm on a brokerage. This is where you buy stocks on. So, yeah, if you want to get this brokerage, again, it's in the link tree in my bio, first link there. So here's Take Two. This is the company that owns Rockstar Games. So if you've heard of GTA 5, GTA 6 is about to come out, Red Dead Redemption, this is the company that owns it. And the reason the stock is at all-time highs, why they've rallied up so much, is because they're soon anticipating the huge revenue spike that's going to come from them selling GTA 6. Because whenever they release that game, it's literally instantly going to bring them in like billions of revenue. So it's really pricing in that future gain of revenue because the stock market's so forward looking. That being said, I do think it's like probably mostly priced in. The risk reward doesn't look great on this one right now. Not at all-time highs. Like everyone already knows that GTA 6 is coming. Like it's not some insider knowledge. Hey, so Connor said AbbVie. I'm in love with this stock right here. If you want a company that's just going to return you like 6%, 7% a year on average forever, not financial advice, I think AbbVie's a great pick for that. And a high yielding one too. You get a 2.9% dividend that's completely safe. And what does this company do? What do they sell? Well, they actually sell a bunch of different prescriptions. Like you've maybe seen Skyrizi before. This one has grown immensely. The sales are up 62% after going 44, after going 50, after going 85, after going 104. Like they're on a growth streak, and that's just one of their products. Look at this. They created this in 2019. In 2019, the revenue was 300 mil. Now it's 11 billion, and it's growing since. So that's blowing up. Rinvoq or whatever that is. Look at that, up 41% after going 55, after going 55. Like the growth is just insane on this company. Anyway, that's why I like AbbVie. A lot of popular prescriptions. They're kind of like a mini Eli Lilly, higher yielding Eli Lilly. I do like Eli Lilly too. That's a great one. Okay. Is it better to buy a whole share of a stock or the value amount? I think you just do a limit order. Both are both are fine. ADRNY. Let's see if we can find this one. ADRNY. Oh my goodness. NY. Trying to autocorrect each time. ADRNY. Oh, it is on my watch list. Okay, so yeah, this owns a bunch of like food chains like Food Lion, grocery stores. They're a European company, so we'll convert their currency to USD. Do they have a dividend? They do. So you get a 3.5% dividend with this company. They trade at 16 times net income. That's fair for the industry. Let's actually, well, not that makes Walmart and Costco look extremely expensive. But yeah, the revenue's up 13%. The net income is 500 to 600 million a quarter. So they're like a quarter size of Costco in terms of net income. I liked it. So what's their margins? So yeah, similar margins, 2% margins basically, but they're another cool grocery store play. What do you think about Coca-Cola? Hey, Bull, I'm gonna hop into YouTube. Hey, Jace, thanks so much, man. Yeah, hey, by the way, the best way to support me is just watch my stream from YouTube. I'm trying to build up my YouTube following. So if you want to support me, make sure to check out my YouTube channel. I'm streaming on there. If you miss anything, you can replay it. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. By the way, I sell nothing. I have no course, book, WhatsApp. Watch out for people impersonating me. I'll never follow you, DM you. So let's look at this stock right here. BULL. So this is Webull right here. This stock right here is a brokerage. I have a Webull account. Oh, I was wanting to go to Coca-Cola too. Remind me to look at Coca-Cola. But yeah, I have a Webull account. I've probably given them a lot of fees and stuff. So I do like their app. And they just IPO'd. But good news, the sales are pretty growthy. The revenue is up 46% year over year. So hopefully they can continue this really high growth number. They are still struggling with net income positivity, like losing money, making money. But if they can turn into like a Robinhood or like an interactive brokerages where they're doing 40% net margins, they just got into crypto. They just got back into crypto as well. Yeah, 93% of the revenue comes from the USA. Pretty interesting. So yeah, actually, they're like a mini Webull, but I like Futu and Robinhood. Those are the one I own. All right. So hey, try not to spam there, user. Yeah. Hey, we'll get to the ISOR. Don't worry. Let me look at Coca-Cola though. Hey, Plasma. Good. What's up, man? Let me pull up Coca-Cola real quick first. So that's a company in the Buffett portfolio. So if we get, super investor has to make all his trades public and his portfolio weighting, and we can see that 8.66% of his portfolio is in Coca-Cola. He owns a lot of the higher yielding stuff like Bank of America, Chevron, Oxy. So let's look at Coca-Cola here. A lot of the food names, the beverage stocks, like you look at Pepsi, General Mills, they've been struggling a little bit lately. As well as the actual restaurants like Wendy's. So I'm not shocked to see this one down a little bit, but I like this one for the dividend. You get an over 3% dividend yield with this company, so that's great news. They're not that growthy though. Like I don't expect them to outperform the S&P 500 in the long run. Guys, look at this revenue. The revenue is only up 1.3% year over year. That doesn't really beat inflation. But they're still making a lot of money, 2 to 3 billion in net income a quarter. Buffett owns it. So yeah, it's a nice dividend play, dividend growth play. They raise the dividend every year too. I actually own the bottling company. So I own a different Coca-Cola. I actually own Coca-Cola Consolidated. Look at the growth on this one. This one's been that's insane, the growth on this stock. And I don't even mind buying it at this all-time high level. Yeah, that's where I bought it. So yeah, Coca-Cola Consolidated, I like them. Have you done? Yeah, we just looked at Costco. If you give me a little bit, we'll look at them in a little too. So King said SoFi stock. Yeah, dude, SoFi. I own this company as well. I love this company. So let's see, SoFi Technology. This is a fintech right here. They have their own banking charter, and they're too expensive to buy here, I will say, but they certainly deserve a premium valuation because they're high growth. We go to their financial services business. This has been growing very nicely. It is up 105% after going 80, after going 222. Like the growth is insane on SoFi's financial services business. That's why the high multiple is kind of justified. Also, the lending revenue is also at a record, up 30% year over year. They're also beating on analyst expectations. That's the orange line. They beat on revenue, they beat on net income, they beat on EBITDA, so they deserve, to gap up on earnings. They're growthy. People are really taking them serious. Revenue's up 4200 mil in net income. So yeah, SoFi's cool. What app is it? Yeah, hey, Sachin, again, if you want to get this app I'm on, this is where you buy stocks on. It's a brokerage. It's in the link tree in my bio, the very first link there if you want to get this app I'm on. It's my favorite one. So, and then a lot of people just like to keep their idle cash in here because it earns you the daily interest. So anyway, FDIC insured. So this app I'm on is also publicly traded. I do own some of them, FUTU stock. So yeah. So this app I'm using right now, here's their stock publicly traded. Even if they were to go bankrupt, you're still FDIC insured for actually up to 500K. But yeah, good to see that this app is actually doing great. They did 330 million in net income this quarter. So pretty cool. Oh yeah, link tree in the bio, very first link there. It's or you can just type it into Google, just a brokerage called Moomoo. But yeah, hey Cruz, no way, yo! Shout out to the homie Cruz with the $9.99 super chat, dude. You don't have to do that, Cruz. I hope you're having a great Friday, my friend. I really do appreciate that, man. If you got a stock you want me to look at, let me know there, Cruz. Shout out to him. So, yo, Tommy said Apple stock. You know what? We haven't looked at Apple. Yo, we'll actually look at Costco in a minute here. Do you prefer this over Robinhood? Yeah, so I actually do have some other, like I have Robinhood. Here's my Robinhood account. I have a Webull account as well. I've owned all of these apps for many, many years. And my favorite one, if you're just looking for an app to buy stocks on that's useful to actually analyze stocks, this is my favorite brokerage, the one I'm on now. It's in the link tree in my bio, very first link there. It's an affiliate link, full disclosure. It's free, no fees or anything. So anyway, here's Apple. The stock's at an all-time high. I love this. They deserve it as well. Because if we look at some of their metrics right here, like their smartphone market share, they have a 17% smartphone market share. Literally half their revenue comes from their iPhone sales. And then actually the most valuable part of Apple is their services business. If you go spend $100 in the App Store, $30 of it goes back to Apple as a high margin, legit 100% margin royalty. And this is their highest margin business. It's $100 billion of annual revenue for them, continues to grow. Then they have the Mac sales, the wearables, the iPad. And here's why they're also affected by tariffs. And the tariff fears are kind of gone now, but only 36% of the revenue comes from the US. I always thought it was a little more than that for some reason, but yeah, only 36%. Then 26% is EU, 17% is just China. So yeah, another really cool thing about Apple that I don't really see anyone talking about is the amount of buybacks this company does. So check this out. They're making $25 billion in net income a quarter. What is Apple doing with an extra after-tax $25 billion in net income? Well, since, regulators won't really allow them to buy a company or anything, they literally deploy all into share buybacks. If you look at the top here, that's their net common stock issuance. They're literally spending 20 to 25 billion in net income a quarter solely buying back their own shares. That's why the stock doesn't go down. They just buy back all their shares. I can't believe it. Here's what that does for you as a shareholder. If you're like, well, what does that do for me? Well, check out this net income. The net income is up by 9%, but the net income per share is up by 12%. The net income in EPS should always be the same. Unless they dilute you or buy back shares. And since they bought back so much, that's how the EPS is higher than the net income growth. Pretty cool. Hopefully that was helpful on Apple. I might switch funds to Hey. Yeah, again, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Yeah, it's my favorite brokerage right here. And you can track like all the super investors portfolios, like the Pelosi portfolio, see what the experts are doing or what, and you can like batch trade, follow them. And there's so many cool features about this brokerage. I love it. Oh, and you can see like, if you go to the markets tab, stocks, let's see the interest rate probability down here. Oh, wait. And you can also see the hedge funds, institutional tracker. You can see what Berkshire Hathaway's doing, ARKK is doing and all that. But this way, yeah, and we have an 89 or an 87% chance of a 25 basis point cut on October 29th. So on October 29th, 90% chance market's pricing in of a 25 basis point cut. December, another 50 basis point cut. So we're seeing a trajectory of what's going to happen. Dude, no way. Yo, shout out. Yeah, Tommy. Dude, no way. Tommy, thank you so much, man. With the $10 super chat. Yo, shout out to Cruz, man. Tommy, thank you so much, my friend. Have you ever done options, bro? Just curious. I have, but not in over a year. There used to be like a way to show the options. Yeah, I don't do options. Actually, I wonder if it'll show the realized. Well, there's the all-time. Options. Okay, let's see. I've done terrible with options. Let's see. Come on, please load. I've lost like, maybe it's less than I thought. Okay, I've lost $400 with options. Like, here's where, like, this was a long time ago. Look, TSL put, like, I don't know what I was doing. So I'm not good with options, so I don't do them. Any good dividend plays you recommend? Yeah, so one dividend stock I really like, and it's a REIT. This is Iron Mountain. This is a data center REIT. It's literally 95% of the S&P 500 are customers. They have a 3.3% dividend yield. They have a safe mid 60% payout ratio. All right, so dude, thanks again, Tommy. Do you think Apple has potential to grow per share? I think so, Tommy. I mean, I think Apple is the kind of stock you just want to buy and never sell. Thank you so much, dude. Plasma said, did you say you don't like Blaze? Let's see if I said that. BLZE. And thanks again. Shout out to Cruz as well. Cruz as well for the $9.99. Dude, thank you so much. Hope everyone's having a great Friday. You just made my Friday a little better. Thanks so much. So check this out right here. This is Backblaze. So I don't remember this company, but check this out right here. If you look in the top right, the market cap, they're a $540 million company. So I don't love that small market cap, but let's see. They're Backblaze Cloud Storage. So look at this business. This business is actually growing very nicely. It's up 28% after growing 42, after growing 40. It's small numbers, but I love the growth of this. So actually, that's great news. Let's see their computer backup business as well. This would load here. Computer backup. That's up 3.7. So let's look at the analyst expectations. Yeah, they're beating on expectations. Orange lines what the analysts expect. They beat on revenue. They beat on net income. They beat on EBITDA. They had a huge EBITDA beat, and they're expecting the revenue to continue to climb up. Actually, I like this one. I like it more than I dislike it because I've seen a lot of $400 million market caps out there. This is one of the better ones. I wouldn't have it as a huge position. No way, dude. Hey, Cruz, no. Don't match that, dude. Cruz, stop it. Thank you so much, dude. Oh my goodness. Cruz, thank you so much, man, for another super chat. Oh man. Yo, hey, by the way, best way to support me is just show up to the YouTube stream. I just appreciate y'all being that would mean more than a donation. Just show up to the YouTube stream over the TikTok one. I'm trying to build up my audience on there. But dude, thank you so much, Cruz. I can't believe that. So Andy said CCL. I think that's Carnival Cruise Line. To be honest with you, I don't love the cruise lines. Like, if you look at the airlines and the cruise lines, they historically just don't outperform the S&P in the long run. So, like, look at Carnival. Carnival Cruise Line is literally the exact same stock price that it was back in 1998. So, but this is kind of like a swing trade, like an economy boom play, like revenge spend play. I don't know. But at least they're finally starting to make some real profits now. Because if we zoom out to like 2022, it was a nightmare for them. They were literally burning through 2 to 3 billion in net income a quarter. But now that the pandemic's fixed and everything, they're actually starting to make some real net income. That is good news. Like, these are good numbers, but it's just, again, not the kind of stock that's actually going to outperform in the long run. So let's see, occupancy rate. I think it was over 100. Yeah, I would rather buy a Royal Caribbean, but I'd be careful, dude. Oh my gosh, dude, Tommy. I don't even know what to say, dude. Tommy with the $20 YouTube super chat. I legit don't know what to say. I thank you so much, Tommy and Cruz, dude. Thank you so. Happy Friday, man. I legit don't know what to say. I've never been donated anything like that before. Oh my goodness. So let's look at Salesforce right here. Oh my gosh, Tommy. So here's Salesforce. This stock is one of the companies that have really been hurt by the AI thesis. They're thinking AI is going to hurt Salesforce in the long run. Like, maybe in 10 years we won't need, like Adobe as well. Like, maybe in 10 years, Greg said Backblaze is a tough subscription to get rid of because once you have it, it's pretty sticky. I'm a customer. Oh, that's pretty cool, Greg. You hear that, Plasma? That's pretty cool. So Salesforce is another software name. I love their assets. They own Slack, Agent Mule. So look at all these look how diversified that they are. These different segments. They're in services, sales, platform, integration, analytics, marketing, commerce, and they're starting to grow again. If we look at the revenue, high single digit, I do like that. So 9.7% revenue growth. So revenue's up 9.7, but the net income is up by 33. So that does mean they're able to grow their margins. Margins went from 15 to 18, which is good. They're slowing down on the stock-based comp, which is good. They now pay a dividend, a 0.7% dividend yield. Honestly, I think this one is at a good risk to reward right now. I wouldn't make it as a full-size position for you yet, but it looks like a good stock to nibble on right now. The risk reward does look pretty fair. I like their assets. Which clothing stock look good? Yo, I just kind of don't pay attention to that industry because it's just like apparel just doesn't outperform in the long run. But if I had to pick one, I would, and it's kind of a clothing stock. A lot of its revenue comes from other things, but this is Louis Vuitton. LVMEY, they own like Louis Vuitton, Moët, Hennessy, I think Dior. Oh, look at this. The app is saying that there is what is this? A bullish continuation triangle. Okay. Well, I love them because if we look at where their revenue comes from, it's fashion and leather goods, and then some higher margin industries like watches, jewelry, perfumes. The margins on those are insane. Cosmetics. So I really like how diversified that they are. But again, it's the whole industry is kind of getting hurt right now. The net income for Louis Vuitton even fell 14% year over year. Still, they're doing like 3-4 billion plus a net income a quarter. So that's like the safest one. I love them. So let's look at this stock right here, ANET. ANET. I would join. No, Plasma, please don't. Okay, so here's Arista Networks. This stock is at an all-time high pretty much, and they deserve to be as well. If you ever, hey, someone said what app is this? Yeah, hey, again, if you want to get this app I'm on, it's actually a brokerage where you buy stocks on. It's in the link tree in my bio, the very first link there, if you want to get the app I'm on. So here's Arista Networks. They're at an all-time high, and here's why they deserve to be at an all-time high. They sell products and services. If you look at the product sales, it's growing like crazy, up 31% year over year, literally to a new record. And if we go to this down here, the revenue is up 30% to $2.2 billion, but check out the net income. They're literally doing, and it hits a new record every quarter, like $800 million in net income a quarter. That's insane. Really good balance sheet as well. The net margin is a 40%. So you go spend $100 at this company, $40 of it is after-tax net income for them. And they're beating on analyst expectations. Like, I can totally see why the stock is at an all-time high. Like, the financials explain it. And also, financials explain why stocks can be at all-time lows as well. Like, unfortunately, you look at like a Lucid or something. They just burn through money. Okay, so let's see. Give me some stocks. Well, I don't know. Let's see. Buy the opposite of what this guy says. Hey, what up, TJ? Hey, I never recommend anyone buy anything. Always go do your own research. I try to just show you the numbers for yourself, draw your own conclusion after that. But here's a really cool stock, actually. So what up, Kev? He said GRAB. This is Grab Holdings. If you're wondering what is Grab, this is actually an Uber. It's an international Uber is what I like to call it. But check this out right here. If we go to where the revenue comes from, they do exactly what Uber does, deliveries, mobility. But look at where the revenue comes from. Notice the US and Canada isn't on here. It's like Malaysia, Indonesia, Singapore, and they've grown so big now. The revenue is 820 million, up 23% after growing 17%, that Uber decided to take a stake into them. They're kind of backed by Uber. Uber owns 13% of all the shares, and Toyota Motor as well owns 5.5% of all the shares. So it's like an international Uber play that's kind of backed by Uber. Analysts are bullish. They're seeing the revenue continue to climb higher. Their net income, look at this. They're making net income every quarter. They're free cash flow positive every quarter. So Grab's a really interesting growth stock. And they have no net debt too. He got me on Moomoo. I use it for the analysis. Yeah, hey, that's what a lot of people like to do it for, just to analyze stocks on there. Okay, hey, yeah, someone said what's the name of this app? Yeah, hey, the name of this app I'm on is called Moomoo. It's a brokerage. So yeah, you can just go into Google and type in there Moomoo. But it's also, if you want to get this app, use my affiliate link if you want. You totally don't have to. It's in the link tree in my bio, the very first link there if you want to get this app using my affiliate link. Doesn't cost anything, but if you end up depositing $100, we'll both get like a fractional share of NVIDIA. So yeah. Anyway, let's keep going here. Oh, George, he just said a great stock. So he said, well, actually, my brother's at Chick-fil-A right now. So this is NU Holdings. This stock is nearly at an all-time high, and they deserve to be as well. This is like a crypto-adjacent play. If we go to where their revenue comes from, do beware. But this is actually good news in my opinion. 93% of their revenue comes from Brazil. And why is that good news? Because that's where crypto is so popular for exchange purposes. Like here in America, people don't really buy stuff with crypto, but down there in South America, Brazil, their currency isn't very good. And crypto is actually used for transactional purposes. So this is a crypto bank out of Brazil with good growing fundamentals. If you look at the revenue is up 28% after growing 52%. And it's not just revenue, but real net income. Like they're making 500 million plus of after-tax net income a quarter. It's insane, the net income. And what's the net income multiple? They trade at 33 times net income. Like that's pretty fair. Trading at 33 times net income. They're pretty growthy. I like the industry. Probably a bit Bitcoin adjacent and stuff. But yeah. Okay. Let's see. Louis said GCT. I think that's like GigaCloud something. Yeah. So this is an interesting one. A bit of a diversified company. I still have troubles fully understanding this company, because let me show you this right here. If it would load. RIP my Wi-Fi. But yeah, check this out right here. They're an off-platform e-commerce, GigaCloud 1P, last mile delivery company, warehouse servicing, ocean transportation servicing, packaging service. Like, they're in so many industries, could be good or bad. But one thing, they did kind of slow on their revenue growth. That might be why the stock has kind of been flat for a while. But the revenue is only up 3.8% year over year. It was tough comps though, because it had just doubled from the previous year. But yeah, revenue's up 3.7. And good news, they're making net income every quarter. This is actually great news. They're making 30 to 40 million of net income a quarter, and the whole company is worth 1.1 billion. Yeah, they're trading at 9 times net income. 75% of the revenue comes in the US. So pretty cool. Thoughts on EOSE? What's this one? So EOS Energy. Wow, look at that. This company is at an all-time high. Well, multi-year high, I should say. Let's see. Like, that's crazy momentum. Let's see what the forecasts are. So product revenue looks like it's at a record right now. Ooh, so check this out right here. If you own this stock, EOS, it's the reason the stock has rallied up so much is because there's so much future growth being priced in. Because check out what happens in 2 quarters. So the next 2 months, or the next 2 quarters, are going to be very crucial to watch. As the revenue goes from 15 million to 81 million. That's an insane increase. So that's really what you're watching. Yeah, the revenue of 15 mil. It was a record this quarter, record 15 mil. But again, in 2 quarters, 81 mil, watch out for that. Really growthy company, apparently. And hopefully when they make that revenue, they'll make profits and deleverage and all that. So maybe it's all I'd be careful at this price. Maybe it's all priced in. Do you use Yahoo Finance? Not really. I can't remember the last time I have, but they're a good, useful tool, like accurate one. So this next stock I want to go over is CoreWeave, and we'll try and look at FOUR. We'll try and get to these. Opinion on sale. We just looked at Salesforce, Lucas. I apologize. By the way, if you missed anything, you can replay it on the YouTube stream. I'm streaming on YouTube as well. So what platform is this? Yeah, hey, Gabe, if you want to get this platform I'm on, this is a brokerage. It's where you buy stocks on. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. I don't know what I just clicked. So anyway, check this out right here. One of the stocks I wanted to go over is in the NVIDIA portfolio. It's NVIDIA's largest holding. It's CoreWeave, the data center play. And hey, look at this right here. This says there's, what is this? A double bottom, and the rise probability is an 81% chance. Well, that's some technical analysis. As you know, I like looking at the fundamentals. Let me actually go look at some news, though. Daily brief news. CoreWeave signs $22.4 billion cloud computing agreement with OpenAI. You can give a thank you to NVIDIA, because after NVIDIA took a $100 billion stake into OpenAI, they got the deal with CoreWeave. So CoreWeave really has benefited from being in the NVIDIA ecosystem. And check this out right here. I love them specifically for the growth. Check this out. The revenue the same time last year was $395 million. Now it's $1.2 billion, a 3x increase year over year. Very nice revenue growth. You're still watching the net income numbers because they are still burning through a couple $100 million net income a quarter. But that's kind of expected by the analysts to stay at negative 50 cents a quarter. Thanks again to Cruz and Tommy. I can't believe the super chats, dude. We'll probably be streaming for a little bit longer here. We'll look at a couple more ticker symbols. Hope everyone's having a great Friday, by the way. If you wanted to follow on, we stream every day, every Friday. I sell nothing. I have no course, book. I don't sell nothing. So anyway, let's keep going. Let's look at, since Costco has kind of been in the news, I'll be really quick about Costco. Let's go see what they reported versus the analyst expectations. First off, I love their business model. You have to own a subscription to get into a Costco, and whether you go or whether you not go, they're still collecting that money. What was their comp sales? Okay, not too shabby. Let me go with the analyst expectations. So they beat on revenue, that was EPS. So they beat on revenue just barely. They beat on net income, and they beat on a slight miss on EBITDA. So pretty much things were in line. Revenue was up 8%. That's great. Net income's up 10%. So they were able to grow their margin a bit. But look at these net income numbers. They're making pretty much $2 to $2.5 billion of after-tax net income a quarter. So Costco is a great company. I would love, love, love to own Costco. But one thing that scares me is this high valuation. I think maybe the stock is just getting to a healthier multiple, like 50 times net income for a company that'll probably grow for a 3% net margin business that probably grows mid to high single digits for the rest of time. It's tough. but they're quality. Like they're the most quality out there. Okay. Hope you're doing well, Nate. Hey, Charles, thanks for the nice words. Hope you're doing well too. What up, Jimbo? Do you think Novo will recover? So yeah, this is Novo Nordisk. There are some like headwinds persisting on them, like they lose their exclusivity for Ozempic. So yeah, this is that weight loss company. If you've heard of Ozempic before, like Elon Musk is on it. This is the company that owns it. They also own Wegovy, and they lose their exclusivity in a couple years. I think in 2 years, which is unfortunate. And that was slowly being priced in. Also, there's some bearish technicals, but as you know, we don't look at technicals. We look at fundamentals and financials. I kind of like to blend the two together sometimes, but let's see. They're trading at 14 times net income, so that's low for the industry. You know, the industry average is 22. Again, it's because of the uncertain future. They also missed on some metrics this quarter, missed on net income, missed on EBITDA. But yeah, 93% of the revenue comes from their obesity care products. Again, Ozempic, Wegovy. And for right now, the business is absolutely booming. Like right now's financials are incredible. They're making easily over $4 billion of after-tax net income a quarter. The dividend yield is at 3.3%. Like that's a great yield, safe yield for now. But it's that uncertainty of the future. I think it's mostly priced in. Honestly, I think the risk reward looks good on Novo Nordisk. I like the risk reward on them right now. So yeah, I know Eli Lilly is really speeding up their Zepbound production and really increased competition to Ozempic. What apps or tools do you use? Yo, I love just Moomoo right here. But yeah, here's a cool one actually. I might you don't even have to make an account or anything. This is a great website. Okay, free tool, stockanalysis.com. So anyway, do you use discounted cash flow method when selecting stocks? Not really. I mean, I kind of just discount. I do a multiple in my head. I have done that before though. I do like way more than that. Like I blend so many metrics together. Or I try to. So Costco will recover probably, you know, over the long run, but I think the multiple is, I wouldn't have Costco as like a big meaningful size position. I just don't know if it'll outperform the market in the long run, but it historically has. And that's the thing. It's tough arguing for me. Like it historically has. Like the insane performance on Costco is great, but the multiple looks too high. What happened to EA today? I think there was some sort of merger and acquisition news around them. Let me check. We should get some AI news. Nope. Well, I guess we'll go to this news. Electronics Arts shares jump 15% on private takeover talks. So it looks like a private company's looking maybe to buy the stock. Is that an all-time high? Wow. All-time high on EA. What games do they own again? I know they own like Plants vs. Zombies and random stuff like that. Battlefield, Apex Legends, The Sims, Madden NFL, FIFA. So they have some real popular games, and they have a nice yield too. Let me check out the dividend. A 0.4% dividend, very safe payout ratio. And, you know, the dividend would have been higher if it weren't for today's huge rally. And they're net income positive every quarter. They're making like 200 to 300 million in net income a quarter. What does that multiple mean? Yeah, or I forget which one we're looking at that, but like PE, this stands for net income multiple. So if they're trading at 48 times net income, or they're right now yearly net income, and it looks this stock right here. I don't. Sometimes look at the forward PE. The PE is the net income multiple plus any share buybacks or dilution. What do you think of BBAI? I don't love this name, to be honest. Oh, we got to look at Unity. Hey, actually, maybe we'll look at them over Big Bear AI. Because here's the thing with Big Bear AI, like super quick, revenue's down 20% year over year. So revenue's down 20, and they lost 220 mil, 70 mil, 150 mil. But something to look for in the future, probably going to be a good tailwind for them. They signed a deal. See if I can find the exact news. It might be too far away, but they signed a huge like $1 billion deal with the Asia data center. Oh, I just won't be able to find it. Maybe I'm thinking of a different company, but I would be careful with that one. So let's look at Unity right here. This is a software company, like a gaming software. If anyone's heard of the game called Rust, that was made in Unity. And unfortunately, I can't buy this stock just because of the declining fundamentals. I love their software, but I've used Unity. I made an intro in Unity a long time ago, a 3D run. But anyway, this is the bad news. If we go to the revenue's down year over year. The revenue's down 2% after being down 15% from the previous year. So the business isn't growing. Like we can see, it's down every quarter. And if we go to the net income, then it is improving, but they're still burning through over 100 million in net income a quarter. So we really want to see them narrow these net income losses and kind of bring the growth back to the sales. But yeah, this is a long time ago, and the CEO got canned for it. They changed their subscription model and how they price it to customers. Instead of like a one-time monthly fee, it's like they charge you for how much you use it. And it was a mess. Fortinet price action is showing signs of gain. So yeah, I love this company actually. If you're looking for a cybersecurity stock, this is one of my top picks out there. I love Palo Alto Networks as well, but I love subscription model companies and the cybersecurity industry. And check this out, 40% of this company's revenue comes from their cybersecurity subscription. And it is a growth beast. And it's so predictable as well. It hits a new record every year, every quarter. It's up 22% to a new record, hits a new record every year. And they're not just growing the revenue. Like it's not just they're making revenue, but they're actually making money, after tax net income profits, if it would load here, and they're deleveraging their balance sheet. Great news. But yeah, look at these net income numbers. They're making 400 to 500 million of after-tax net income a quarter. So that's great news. All right. So do you own any mid-cap stocks? Yeah, of course. A lot of these. Comfort Systems, Amphenol, Coca-Cola, DocuSign. What app is this? Yo, what up, Eugenia? Hey, by the way, this is a brokerage. It's where you buy stocks on. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's my favorite one. So what is ONTO? This is Onto Innovation. Let's check it out. It's a $6.3 billion company. So they actually have a pretty sizable market cap. They're up nicely since 2019. Not the past year though. If you scroll out to the past year, the stock is well off its peak of like $200 plus. Let's see if we can figure out what happened there. So it looks like this has obviously been, I'm betting the expectation wasn't this bad before, but it looks like next quarter is really bad guidance. Let's check revenue though. So revenue's up 5%. Net income fell by 30. Was that real? It was. So the net income did fall a little bit. So their margins compressed a bit, but they have an absolute monster balance sheet. Wow. They have they have $900 million of cash, no debt. And let me see. Oh yeah, here's some cool indicators. Yeah, if you scroll over to the left here, you can get the main key indicators. Let's see. They have a 52% gross margin, 21% operating margin, 20% EBITDA. Their tax rate is 9 or 10%. Oh, it's on the very left here. I'm looking at the wrong. I'm looking at 2025 Q1 for some reason. But anyway, free cash flow to sales is $24. You can spend $100 at this company. $24 of that's free cash flow. So I love the balance sheet here. Yeah, free cash flow positive. I just kind of want to see more growth, 4.65% revenue growth, negative net income. I can kind of see why it's like a mixed bag. Like there's mixed sentiments going on there. So yeah, Tommy said SoFi. Yo, I do own SoFi, by the way. I might be biased. I regret every share I've ever sold to them. One of my worst mistakes was selling out of this. So what platform is? Yeah, hey, again, if you want to get this, I'm on a brokerage. It's where you buy stocks on. If you want to get it, it's in the link tree in my bio, the very first link there. But check this out. This is what I love about SoFi. They're a fintech and they're super growthy. Like they have a high premium. I certainly wouldn't pay at this price right now, like especially over 25, like don't touch it that high up. There's just not, the risk reward doesn't look great there, but their financial services business is so growthy. This is what justifies the high premium, the high valuation. The revenue is up 105% after going 80, after going 222. Like this is crazy. And if we look at the expectations, the orange lines, what the analysts expect, they're beating on revenue by a good chunk. They're beating on net income. They're beating on EBITDA. People, I think, are just really taking SoFi serious. They did 850 million of revenue, and out of that, 100 million of it was after tax net income. They're net income positive every quarter. So I really think people are taking SoFi serious. All right. Let's see here. We'll look at a couple more. All right. So, is it know your customer? No, it is a know your customer. You gotta. All right. like any brokerages. Okay, BYDs. Are you? Let me know if you're talking about BYD Gaming or BYD the car company. SoFi, a good investment. I think it is a good investment, but not at this price. I bought this company years ago, and I again regret every share I've ever sold to them. Like, here's where it's at today. I was buying SoFi. It should show me. Yeah, right before earnings this day. I still remember it. It was January 2023. So I've just been holding them on for. I've been diamond handing this one. I trimmed some shares, which I regret doing, but I've been diamond handing my majority SoFi. Yeah, but buying it at this price is tough, especially with meaningful money. You could maybe nibble on it right here, but don't make it a meaningful size position. They are going to be a winner in the long run, though, I think. I love the growth on them. I mean, that growth is so good. The net income positivity, I love it. So BYD, the car company. So yeah, this is a Chinese ADR. And let's see if we're able to view the stuff. So yeah, we can. They're trading at 21 times net income, so that's actually a pretty fair multiple. If we didn't have tariffs on this company, their cars would literally be all over the U.S. But yeah, China is 63% of the revenue, and they report in halves because they're Chinese. But look at these profits and these growth rates. I mean, this is good. It's actually way better than Tesla's net income numbers, surprisingly. But look at this. They did 2.25 billion in net income so far this year. That's like 2 or 3x Tesla's net income so far this year. And this is in USD. So yeah, they have a dividend too, a 1.4% dividend yield. Not too shabby. Do you ever buy options? I actually don't. I don't really do options, no. Let me hide my screen real quick. I think someone's texting me. Hopefully no one can see that. Okay, well, all right, I got a Chick-fil-A salad. Well, that's good. Okay. Tesla has a good CEO. That's true, but the financials, okay. We'll look at a couple more here. I have to go in a little bit. Open Door. You know what? We'll cover Open Door and their momentum. So this is one of your interest rate sensitive plays, because as we go into a lower rate environment, that'll really help out Open Door. They're propped up on momentum. They're extremely overvalued, in my opinion, like from a fundamental point of view. But check out what happened the last time we were in a lower interest rate environment. I mean, they were doing crazy growth. I mean, 4 to 5 billion in revenue a quarter. But as rates hiked up quickly that year, check out what happened. The revenue fell like crazy, negative 70%, negative 69%. Like the revenue fell off a cliff on Open Door. But analysts or people are bullish and momentuming the stock because we just cut interest rates by 25 basis points. And if we go to the let's go to the projections real quick on what markets are expecting next quarter or next month. It's right here. Yeah, an 89.8% chance of a 25 basis point cut on October 29th. So yeah, pretty interesting. All right. XEQT. What is XEQT? So BlackRock Asset Management Canadian dividend. So look at that. It's at an all-time high right now. So that's pretty good. Let's see what it holds though. Let's go to its, this is an ETF. Oh, it holds basically some US other BlackRock ETFs. What's the expense ratio? Not too bad. A 0.2% expense ratio. You get a 1.9% dividend yield. The performance has done pretty good. I mean, looks like the same as the S&P 500. Not too bad. Let's see here. Oh, wait. Yeah, here. Sorry for the YouTube stream. Yeah, hey. There you go. Yeah, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Okay. The one squib said UMAC, unusual machines. Huh. So is this a space stock or I don't remember. That's Intuitive Machines. So what do they do? Let me actually go check real quick. They're in the drone concept stocks. Okay. We can kind of see what exact ecosystem they're in, but let's go see. Do they have sales yet? They kind of don't. So revenue of 2 million this quarter. I mean, 2 mil. The balance sheet just beefed up. Did they issue shares to do that? They did. They diluted by 36 mil. I mean, I don't blame them with how good the stock's done. I guess we're just watching the next couple quarters. In 2 quarters is expected to be 4 million of revenue. So I guess watch that. That probably wasn't too helpful, but looks like a revenue-less drone play right now. So anyway, I gotta go. I hope you guys have a great rest of your Friday. Sorry this one was a little short. I'm gonna do an extra long stream tomorrow and then on Sunday as well. So by the way, if y'all wanted the follow button, we stream every day, sometimes twice a day. I sell nothing, no course book. And again, shout out to Cruz and Tommy for showing up to the YouTube stream and the super chats. I can't believe it. So hope you guys have a fantastic rest of your Friday. See you later. We'll be streaming tomorrow on Saturday and on Sunday. We stream every day. But number one way to support me, if you want to support me, the best way to is just hit the subscribe button to my YouTube channel or just follow my YouTube channel. My YouTube channel is just called Nathan Robert. You can type into YouTube Nathan Robert, but it's also in the link tree in my bio. And if you miss anything on the stream, you can replay it and it's always there. So see you guys later. Sometimes I talk too fast. I do apologize. See you guys. Hey, thanks again, Cruz and Tommy. Thanks for being here, man. Have a great rest of y'all's Friday. I don't know how I can ever repay y'all. Actually, I need to somehow DM y'all. I have like I'll figure it out. So anyway, see you guys later.